You clicked on this video for a reason. Maybe you want to understand money. Maybe you want to get ahead financially. Or maybe you feel like something is changing in the economy and you don't want to be the last person to realize it. Whatever the reason is, this video might be one of the most important financial videos you watch this year. So listen carefully for the next few minutes. Because what we are going to talk about is not news, it's not hype. It's about how money, the economy, and the dollar system really work. Most people spend their entire life chasing dollars, but never understand how the dollar system actually works. They work for money, save some money, spend most of it, and repeat this cycle for 30 or 40 years. And at the end, they realize they worked their whole life, but never became financially free. The reason is not that they didn't work hard. The reason is they never understood how money grows. There are two types of people in the world: people who work for dollars, and people who make dollars work for them. The first group works their whole life. The second group builds wealth over time. And the difference between these two groups is not intelligence, not luck, but financial knowledge and financial discipline. Let me tell you something very important. If you only save money, you will never become rich. Saving money is important, but saving alone is not enough. Because of inflation, every year your dollar loses value. That means $100 today will not have the same purchasing power after 5 or 10 years. Prices go up, but most people's income does not go up at the same speed. This is why investing is important. Your money must grow faster than inflation. If inflation is 3% to 4%, and your money is growing at 8% to 10%, then you are actually growing your wealth. But if your money is sitting in a bank account growing at 2%, while inflation is 4%, you are actually losing money every year without realizing it. Now let's talk about how rich people think about money. Rich people do not focus only on income. They focus on assets. Assets are things that put money into your pocket. This can be stocks, index funds, real estate, businesses, dividends, digital assets, or any system that generates cash flow. Poor and middle class people usually focus on salary. Rich people focus on cash flow and assets. There is a big difference between income and wealth. Income is the money you earn. Wealth is the money you keep and grow. Many people earn $100,000 per year but have no wealth because their expenses are also very high. And some people earn $50,000 per year but invest consistently and become wealthy over time. So income alone does not make you rich. Financial habits make you rich. Now let's talk about the biggest financial trap: lifestyle inflation. When people start earning more dollars, they start spending more dollars. They upgrade their phone, car, house, clothes, and lifestyle. Their income increases, but their expenses also increase. So their financial situation does not improve even after earning more money. This is called the lifestyle trap. Smart people do the opposite. When their income increases, they increase their investments, not their expenses. They buy more assets instead of buying more liabilities. And over time, their assets start generating more and more income. And one day, their passive income becomes higher than their expenses. That is called financial freedom. Another important concept is cash flow. Cash flow is more important than salary, because salary depends on your time. But cash flow can come without your time. Rental income, dividends, business income, digital products, royalties. These are examples of cash flow. The goal is not just to earn dollars. The goal is to build cash flow that keeps coming even when you are not working. Now let's talk about the economy and why understanding the economy is important for building wealth. The economy moves in cycles. There are growth periods, slowdowns, recessions, recoveries, and booms. Most people don't understand these cycles, so they make emotional decisions. They invest when the market is high and panic when the market is low. Smart investors do the opposite. They invest consistently in all market conditions. When markets go down, they see opportunities. When markets go up too fast, they become careful. They think long term, not short term. You must understand this clearly. The stock market is not a gambling machine. The stock market is a wealth transfer machine. Money moves from impatient people to patient people. If you panic and sell when the market goes down, you lose. If you stay invested and think long term, you usually win. Another important thing is debt. Debt can be dangerous, but it can also be powerful. Bad debt is when you borrow money to buy things that do not generate income, like expensive gadgets, luxury items, or lifestyle expenses. Good debt is when you borrow money to buy assets or build a business that generates income. Rich people use debt to buy assets. Poor people use debt to buy liabilities. Let me give you a simple financial plan that can change your life if you follow it for 10 years. First, always spend less than you earn. Second, avoid high-interest debt like credit cards. Third, build an emergency fund of at least 6 months of expenses. Fourth, invest consistently every month in index funds or good assets. Fifth, increase your income by learning high-income skills. Sixth, build multiple income streams. And seventh, think long-term, at least 10 to 20 years. If someone follows these simple steps for 10 years, their financial life can completely change. But most people will not follow this, not because it is difficult, but because it is boring. People want quick money, fast success, and easy wealth. But real wealth is slow. Real wealth is built step by step. You must also understand the power of time. Time is more important than money when it comes to investing. Someone who invests $500 per month for 20 years will often have more money than someone who invests $2,000 per month for only 5 years. Because compounding needs time to work. Compounding is the 8th wonder of the world. When your money starts making money, and that money starts making more money, your wealth starts growing exponentially. But this only happens if you stay consistent and patient. Now think about this. Most people spend 10 years working very hard, but have nothing to show for it except expenses and maybe a car. But if someone invests consistently for 10 years, they can build a strong financial foundation. The difference is not income. The difference is behavior and financial decisions. Another important idea is multiple income streams. In today's world, relying on one income source is risky. Jobs are not always secure. Industries change. Technology changes. Companies change. So it is always better to have more than one income source. This can be freelancing, online business, investing, content creation, digital products, or any side income. The goal is simple. You should not depend on one source of dollars. You should build multiple sources of dollars. That is how financial security and financial freedom are built. Also remember this. Looking rich and being rich are two different things. Many people try to look rich by spending money. Real rich people focus on net worth, assets, investments, and cash flow. They focus on financial freedom, not financial appearance. If you want to become financially strong, start thinking differently from the average person. Average people spend first and invest later. Rich people invest first and spend what is left. Average people buy liabilities. Rich people buy assets. Average people think short term. Rich people think long term. Your financial future does not depend on one big decision. It depends on hundreds of small decisions. What you buy, what you invest in, how much you save, how you increase your income, how long you stay invested. These small decisions decide your financial life. In the end, the goal is not just to earn dollars. The goal is to build assets, build cash flow, build financial security, and build freedom. Because money is not just about buying things. Money is about freedom, time, security, and choices. So start focusing on assets, investing, cash flow, financial education, and long-term thinking. If you do this consistently for the next 10 years, your life can be completely different, not because of luck, but because of discipline and smart financial decisions. Remember this line and never forget it. Poor people work for dollars. Smart people save dollars. Rich people invest dollars. Wealthy people make dollars work for them. And the earlier you understand this, the earlier your financial life will start changing.